when you think about it, a 25% tariff on our two largest trading partners. I mean, Mexico has now become the #1 trading partner with the United States, followed by Canada. And part of it is the markets are highly, highly integrated, particularly, I would say, the two sectors that have sort of already been touched on, autos and energy. I mean, autos is one of those industries where you're seeing some of the auto parts literally crossing the border 8 times before they ultimately get developed into a car. So when you start to then put a tariff on of 25% on each one of those parts each time it crosses the border until it ends up becoming developed into a car, you start to see how incredibly significant this idea of a 25% tariff on trade with Mexico and Canada. I mean, again, you think about it, that right now, the trade between the three countries is now in the order of $2 trillion a year, $3 million per minute, accounting for 10 million jobs and at least 15% of global trade. So this idea of hitting our two largest trading partners, again, with this somewhat unusual notion of using tariffs, a trade tool, again, an economic trade tool, in order to fight something that is not particularly trade related, in the sense that, complaining about fentanyl or about, border crossings, migration issues, but yet using this tariff tool to do it is, again, a very out of the box. And again, from, many people's perspective, not an appropriate use of a tariff, and certainly not consistent with the commitments that we made. Yeah.
Is there a sense that it is the initial salvo? I mean, this is a businessman. He's a negotiator. It's a case of putting the numbers out there so that perhaps, his trading partners will come to the table and give a good deal.
Oh, absolutely. Yes. I think, again, you can expect this to be very, very transactional. And I think that's part of the reason for announcing it well before he's even in office. I mean, he is clearly looking for, and I would say, Canada and Mexico to come to him with offers of things that they can do. And I think you already heard a little bit of the flavor of what Canada is going to say, which is, why are you coming after me, Canada? With respect to fentanyl and with respect to migration issues? That's really not been the issue that the United States has seen, is, again, a flood across the border coming across the Canadian border. And the issue is whether this is partly trying to divide Canada from Mexico and have them be treated differently. But there's no question that this is an opening salvo of a negotiation to try to get, again, and the problem is a little bit of an unclear result. So again, the bargaining will begin about what do either of these countries have to show in order to demonstrate that they've come forward with something that would be acceptable in order to get these tariffs lifted.
Eli, let's bring you into the conversation. I mean, as Jennifer indicated, these are huge numbers. These are, direct trading partners. Does that change the calculation for you when you take a look at your investment strategy now?
Yes, absolutely. So look, President Trump is going right for the jugular here. These are the 3 largest trading partners of the U.S. And I think we have to be really careful on how this is probably going to reset inflation expectations. Now, I think the general consensus for Trump's 2.0 so far is that it's good for equities, it's bad for bonds. And we've seen, bond yields on the long end come up as well. Now, there's a limit to how much bond yields could come up without scattering the equity rally. Now, we think that if inflation expectation starts creeping up, the Fed stops cutting rates. Now, we could see the 10-year move towards 5%, and history shows us that if it goes beyond that, then that starts to be a problem for the equity uptrend that we're seeing. So this is something that we have to be real careful of, Haslinda.
Of course, this is ahead of PCE. It's also ahead of that December move. Expectations are that the Fed may cut 25 basis points. Might this just change the needle for the Fed?
Well, we think that the Fed is probably mostly on autopilot for the next 2 to 3 cuts for now. I mean, they've just started. Real rates are still too high, and Trump hasn't come on yet. So I think they'll do a little bit of wait and see on how the data comes in. But I think, from the last minutes we saw, I think certainly growth is still resilient. They are watching out for how, inflation expectations are moving. And again, if Trump's tariffs moves that needle in the direction that they're not looking for, I think we could see probably higher bond yields start to be a problem for markets.
What we're seeing right now is the reaction in the dollar at the highest level in about 2 years. I mean, how concerning is that?
That is a problem. That is a problem. That is a problem for emerging markets, and that's a problem for Trump too. He wants a weaker dollar. We've heard that, which is why I think the nomination of Scott Bessent as Treasury Secretary is a really, I think, key development yesterday. In fact, I think we saw the dollar weaken on the news of his nomination. We saw bond yields come down as well. And I think, he has expertise of how markets work. And I think he's going to be really instrumental in helping Trump get his cake and eat it too, meaning have his tariffs, but yet have markets perform well.
Jennifer, we heard from Eli saying that Trump understands how the markets work. Does Trump understand how tariffs work? Because by imposing tariffs on trading partners, it may come back to bite him in, well, you know where.
I would say many people would argue that he does not, because certainly he kept saying again and again on the campaign trail that it was China that was paying the tariffs or Mexico that was paying the tariffs, when obviously the reality, it is the American importer that is paying the tariffs. So again, the basic cost of all of these tariffs falls on the American importer. And again, just to be clear on the impact on inflation and everything else, with respect to these Mexican and Canadian tariffs, the importers are bringing these in because these are inputs into what we need. Again, they're largely bringing in parts and components and oil and gas. And so when our importers now have to pay a lot more for all of those components, it makes everything that they make using those imports much more expensive. Again, if you flip over to what's going to happen with respect to China, again, they're going to add an additional 10% tariff on top of already all of the existing tariffs. I mean, to me, what's really significant there is what does not right now have an additional tariff coming in from China. It's largely a lot of the kind of retail ready products that are sold at Walmart and Target and all those places. It's electronics, it's computers, it's watches, it's appliances, it's clothes, it's shoes. Those have largely been spared from these extra China tariffs, but now they are going to get hit by this additional 10% tariff. And again, a lot of that I think you're going to see immediately get passed on in terms of increases to consumers for the prices that they're paying for things.
Mm. And by some calculation, U.S. imports would drop 50%, exports slumping 60%. I mean, Trump won the election on the basis of an economy that is, squeezing most of the Americans. I mean, how do you see this playing out in the U.S. economy? How might that impact growth going forward?
So I think it's going to have a very negative impact on growth because, again, a lot of what's being imported are parts and components that you can't just change at the last minute and say, OK, well, never mind. I don't want it from China. I'll buy it from somewhere else, or I don't need this part from Mexico, because those component parts have been, again, engineered and designed and tested and qualified to go into that particular use by that particular American company that is using it to make something else. And they cannot simply immediately turn on a dime and start using product coming in from somewhere else. So it will have a downward pressure on, again, U.S. production. It will have an upward pressure on prices and overall, again, a downward pressure on economic growth and activity. I mean, we saw this when the Trump tariffs went on initially, 10% on aluminum, 25% on steel, and then ultimately the tariffs on about $360 billion worth of imports from China. Lots and lots of economic studies to look at what was the impact of the tariffs. And the stated goal was to return manufacturing and return jobs to the United States. And if you looked at it and said, did it do that? The ultimate answer to that question so far has been no. Because those tariffs hurt so many of the downstream users of steel and aluminum that there were job losses there. There was retaliation, again, heavily by China, affecting lots, for example, of agriculture exports. So again, lots of people that had been exporting lost their jobs. So the net effect of the tariffs to date has been a negative one for the U.S. economy. And so I would imagine that with now these idea of increasing the tariffs, particularly on Canada and Mexico, our two largest trading partners, the effect is going to be even more of a negative downward pressure on U.S. economic growth.
And for China, Eli, the effect will also be negative. This is an economy that's just experiencing nascent growth. Yet, when it comes to the markets, you say that you are pretty constructive, China, that you should be overweight.
Right, so that is largely a function of valuations, right? I mean, so much negative news have been priced in. Really, the worst 60% tariffs has been telegraphed in advance. And I do think that the Chinese authorities are much better prepared this time to deal with what's coming. I think,
what's in the toolbox? How can they counter this?
That's interesting because they've done quite a fair bit in terms of the monetary side. They've tried to, do a lot of restructuring in terms of local government financing as well. Now, the last arrow to come will be fiscal, right? And, China has been running on a dual-track economy over the last decade. One is focused on exports. That's going to be in real trouble with Trump's tariffs to come. But the internal economy, the domestic side, now that's struggling right now. And we think that they are probably holding in reserve fiscal policies to boost domestic consumption. And with Trump's tariffs being announced, that's probably in reserve to counteract that when it comes.
So you're looking at a triple R cut soon?
Sure. Yeah, I think, on the monetary side, the easing is going to continue. There's going to probably more to come in terms of clearing the, unsold inventory on the housing side as well. What's really been lacking and inadequate and frankly disappointing so far is the lack of fiscal, especially in terms of, boosting consumption demand, in terms of, I think, what we are seeing in terms of business confidence as well. And that, I think, will come probably in the first half of next year in response to Trump's tariffs internally.
If you're overweight China, what would you be buying right now? When we see a dip in Chinese stocks, what would you be buying?
Right. The strategy here is we think the A shares are probably more domestically focused. It'll be more sheltered against the tariffs. We talked about the domestic track earlier. The large platform internet names are excellent companies. Those are really attractively valued right now. And I think the last prong of our approach is really the quality yield plays that are stable, growing companies that give cash flow. So we think they are still on a bottom-up basis, a lot of attractive opportunities in China.
Okay. Jennifer, before we let you go, what are the prospects of a trade war? An extended trade war?
Yeah, exactly. So just to understand it, I mean, obviously, all of these tariffs break the U.S.'s commitments. I mean, under the USMCA agreement with Canada and Mexico, we committed to charge 0 tariffs on goods that meet these rules of origin, qualifying as these goods. Similarly, we agreed within the WTO system not to charge China any more tariffs than those that were listed in our tariff schedule. So all of this violates the United States' commitments to its trading partners, which means that Canada, Mexico, and China are well within their rights at some level to challenge these U.S. actions and to presumably ultimately to retaliate. That is their sort of legal right to bring these challenges and to think about that. And the issue there is whether that's advisable, because once you start down this tit for tat road, again, then it leads again to a much, much broader trade war, which has much more negative impacts for the entire world. I mean, certainly if we see the world breaking up into blocks, it will have a hugely negative effect on the world.